Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 5:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 7th day of March, 2025, and this is the evening report for gold and silver, our weekend review. The U.S. dollar had a strong decline this week as gold had respectable gains. U.S. President Donald Trump's long-threatened tariffs are here, plunging the country into an escalating trade war with China, Canada, and Mexico. Hardest hit this week was the U.S. dollar, declining by a brutal 3.4%. The dollar index opened on Monday at 107.35 and drifted down to a closing value of 103.875. Although the dollar declined by over 3%, gold gained 1.76% on the week, a total of $50, with gold futures basis the most active April contract, opening at $28.71 on Monday and settling at $2,917.70 today. On Monday, February 24th, gold traded to its highest closing value and highest intraday high in history, with gold closing at $2,968. It would drift lower on Tuesday, Wednesday, Thursday, and Friday, trading to a low of $28.45 before recovering this week. The biggest pop occurred on Monday, with gold opening at $28.71 and closing above $2,900. Gold would rise on Tuesday and then slowly and methodically decline until today's activity, in which we had a very, very tight range between the open and closing price, with gold settling above $2,900 at $2,917.17. We did initiate one trade this week, beginning on Friday, the 28th day of February, when we sent out a trade alert to buy April gold at the market. Gold was trading at $2,853, our entry price. Initially, we put a stop at $2,843. Then on Monday, we sent out a trade alert to trail your stop higher to $2,864. We moved it again on Tuesday to $2,899, and then one final time on Wednesday to $2,923 after gold surged past that price point. However, we were stopped out on Wednesday when gold came back down, knocking us out at $29.23. We entered at $53. We got out at $29.23 for a profit of $70 per ounce, or $7,000 per COMEX contract. So, most importantly, where do we believe gold could head over the next couple of weeks? We are working under the assumption of an Elliott wave model that looks at the conclusion of an ABC correction occurring in the middle of December and restarting the clock with a primary first wave that concluded at the all-time record high at the end of February. We then believe that we entered our correction that looks like it's unfolding as an A, B, C correction, of which we have completed our A and B wave. If that is correct, the C wave itself could go to $2,820, I believe, as one of the lower values, or as high as $2,866. That would be a 0.618% extension of the A wave down. The lowest we could see gold go would be a 1.23% Fibonacci extension at $2,790. However, there is an alternative. The model we presented was based on an Elliott wave count and based upon the fundamentals, which are that Tariffs have just begun, and we have yet to feel the full impact, meaning we could see the dollar travel much lower. We could see gold trade sideways and move higher from this point. We will have to see how gold prices and the dollar unfold next week now that the tariffs are fully in play. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for our next series of daily video reports. Bye-bye.